Most traders don't lose slowly. They win first. And that's exactly what destroys them. They turn $300 into $600, maybe even $1,000. And in that moment, they feel like they've figured it out. Confidence goes up. Risk goes up. And then, one trade wipes everything. Today, we're breaking down a book that exposes the exact mistakes that blow small Forex accounts, not theory, not indicators, but the real decisions that quietly destroy traders every single day. And here's the brutal truth. It's not the market. It's you. Let's start with the fastest way to kill an account. Overleveraging. This is where beginners think they're being smart. But they're actually setting themselves up for instant failure. You take a small account. You increase your lot size. You risk big, because you want fast growth. And sometimes, it works. That's the trap. Because one good trade creates false confidence. You feel powerful. You think, this is easy. So you go bigger. And the next time the market moves slightly against you, you don't lose a little. You lose everything. Gone. Not because your idea was bad. But because your risk was stupid. And that's the pattern. Small account, big risk, quick win, bigger risk, total loss. If one trade can destroy your account, you're not trading. You're gambling. Now let's talk about the mistake that happens right after a loss. Revenge trading. This is where logic disappears. You take a loss. And instead of stopping, you feel the need to fix it immediately. You enter another trade. Bigger. Faster. Without thinking. Because now it's not about strategy. It's about emotion. And emotions don't care about risk. They care about relief. You want your money back. Now. So you trade again. And again. And again. Until your account is not just down. It's destroyed. And later you sit there thinking. What just happened? What happened is simple. You stopped trading. And started reacting. Here's a rule most beginners ignore. If you feel angry, frustrated, or desperate, you should not be in the market. Now let's get to the mistake that guarantees failure. No risk management. This is where people enter trades without even knowing how much they can lose. No stop loss. No plan. Just hope. And hope is the most expensive strategy in trading. Because when the market moves against you, you don't exit. You hold. You tell yourself, it will come back. Sometimes it does. And that's the worst thing that can happen. Because it rewards bad behavior. It makes you believe your approach works. Until one day, it doesn't. And that one trade erases weeks, or months, of progress. You don't control the market. You control your risk. Ignore that. And the market will remind you. Now here's another silent killer. Overtrading. Beginners think more trades means more opportunities. So they sit on charts all day. Clicking. Entering. Exiting. Again and again. Not because there's a setup. But because they're bored. And boredom in trading is expensive. Because the more you trade, the more mistakes you make. The more emotional you become. The more your discipline breaks. And by the end of the day, you're not even sure what you did wrong. Because there were too many decisions. Too many entries. Too many exits. And that's the problem. You're not giving yourself time to think. Smart traders don't trade more. They trade less. But better. Now here's a mistake that feels easy. But costs you control. Following signals blindly. You join a group. You copy trades. At first, you win. It feels effortless. No thinking. No analysis. Just profit. But then the market changes. Signals fail. And now you don't know what to do. Because you never understood the trade. You don't know when to exit. You don't know when to stop. You don't know what's happening. So you keep following. And losing. Because you gave away control of your decisions. And without control, you can't survive. If you don't understand a trade, you have no business taking it. Now let's talk about the most underestimated factor. Psychology. This is where even good traders fail. You can have a solid strategy. Back-tested. Profitable. But when real money is involved, everything changes. You exit winning trades too early. Because you're scared to lose profit. You hold losing trades too long. Because you don't want to accept the loss. Fear and greed. That's it. Not the market. Not the strategy. Your mind. And if you can't control that, nothing else matters. Because discipline is what makes a strategy work. Not knowledge. Not indicators. Execution. Now step back and look at the pattern. Overleveraging. Revenge trading. No risk management. Overtrading. Blind signals. Weak psychology. Different mistakes. Same outcome. Account gone. And here's the part most people don't want to accept. You don't need to win big to succeed in trading. You just need to stop losing everything. That's it. Survival first. Growth later. Because if you stay in the game long enough, you improve. But if you blow your account, you're out. If you want the full breakdown of all these mistakes and exactly how to avoid them step by step, the complete book is in the description and pinned comment. Because what we covered here is just the surface. The real value is in recognizing these patterns in your own behavior. Before they cost you again. Because in the end, trading doesn't reward intelligence. It rewards discipline. And the traders who win are not the ones who chase profit. They're the ones who learn how to protect it.